agree with you.
Ian, you know, looking at all the results we've been seeing from the banks, it seems that they're still having a really tough time, except for Capitec, which really had stellar performance in the first half of this year. But overall, how do you see the banking sector playing out in South Africa?
In one word, remaining difficult. I think
So no growth of 20 to 30% during the really good times that we saw?
No. We are outside those really good times. We're in a low inflation environment. That means a low the size of growth in transactions. I think that it's becoming an overly competitive market. It's going to be very difficult to get that growth purely in South Africa, which is why I think the major banks in South Africa are looking beyond our borders. That's where I think the future growth will be.
Okay.
Well, Louis, thanks for joining us. This is Stephen speaking. How are you seeing the environment at the moment? And of course, we had results out from Absa as well not too long ago. That was half-year results. And I think all of the banks really flagged the point that it was difficult at this stage, that it wasn't quite as clear-cut as it looked at the beginning of this year, and that things remained a bit tough going forward. Has there been any change since you released your results?
Stephen, thanks for the opportunity. I think that the conditions are pretty challenging as we have said, and I think we've indicated that this is going to take quite some time to recover. So I guess we're still pretty much in line with how we reported when we did our interims.
Well, Ian, it's quite interesting you were saying across our borders, looking at the rest of Africa, but also just looking at the likes of Nigeria or Kenya. There's so many banks in those regions at this point in time. We keep talking about consolidation on the African continent. Where do you see growth prospects going from here? Because in South Africa, we don't have as many banks as what Nigeria or Kenya has.
No, nor do we need them, because by splitting the numbers too far, you find that you don't have centers of strong capital, and that's what we need now. And that's why I think has been a large point in favor of South African banks getting big brother shareholders. Take Absa and Barclays as an example. An excellent relationship there, I think. They've not only got the capital backing, they've got the experience in other emerging markets. And quite clearly, this is what other banks are likely to do. If we look at Standard, for instance, with ICBC, the Chinese bank, they're also looking at expanding beyond our own borders, not just in Africa, but further afield. And I think really, certainly, there's a proposed relationship between Nedbank and HSBC, and I really can't comment on the likely outcome of that. But nevertheless, it's clear that the banking in South Africa could well benefit from these bigger structures, and from that will allow them to exploit the huge reserves there are of strategic materials in Africa. If there are so many banks, why hasn't it been done before? Because they don't have the capital banking or expertise, as say we in South Africa do, with a strong mining background. We know about African problems, we know how to overcome these. We're used to difficult regulatory conditions as well. I think that this is the move that can be taken from South Africa, the gateway into the exploitation of Africa's mineral wealth.
Well, perhaps you could tell us how you have benefited perhaps from the relationship with Barclays, particularly over the last couple of years and the financial sector crisis, but also perhaps how it might be inhibiting growth into Africa, because of course Barclays has a presence in Africa, which of course might preclude you from entering those countries.
Yeah, I think, the comment that was made now, I think is absolutely correct. And about the opportunities in Africa. And I think, again, our relationship with Barclays at the moment, is really mutually beneficial. Barclays, as you have rightly said, is a strong brand. They basically in 12 countries in the continent. And, you surely must capitalize on the strength of that brand that makes them the number 1 or 2 brand in the majority of African countries. If we can, from a South African bank perspective, to the comments that were made, if we can be successful in taking some of that expertise and know-how, take agriculture for one, it's a key strength of ourselves, and I guess for many South African banks, it's an ideal opportunity to take that out and work with this very rich on resources continent that we have available. We look at structured trade and commodity finance, trading flows, we look at property, etc. I believe that the South African banks has a lot to offer in terms of growth in Africa, and a combination of Absa and Barclays has just been very beneficial for us. It is a slow process because every African country is different, But potential, absolutely. That's why we're very enthusiastic about the continent.
Well, Louis, you know, in terms of what you've been mentioning, it sounds more corporate action coming to the fore and commercial lending. You're talking about agriculture. You're talking about, you know, trade and commodity, structured finance. What about the retail space? What about ensuring that there's more exposure to the people on the ground, because penetration of the banking system in Africa has really left a lot to be desired?
Well, you know, I think, and that's where I made the comment, that I think in that regard, Barclays in certain African countries have established themselves quite strongly with vast footprint, etc. So, you know, that as much as we can assist and support and take, for instance, mobile technology there, I think the growth opportunities is a corporate commercial environment, and some of the issues that I've referred to. I think the basics in the countries where Barclays has a presence is surely in place for us to leverage from.
Well, you talked about some of the strengths, Ian, of the banking sector in South Africa. Of course, capital is one of those strengths. So yes, when they talked about those new levels that are going to come in under Basel III, and I think they're looking at 6.5% Tier 1 capital, and our banks all really look like they could meet that already.
Oh, way ahead.
Or way ahead of that. But there is also a liquidity issue that comes to the fore here, and it's really about matching your assets and liabilities, and that's where we're not quite so strong. Do you see that as a challenge for our banks?
I believe it's a manageable one. I don't think that Basel III is going to come in right away. I think there may be a year or years before we get to that situation, and we'll be able to grow into it. Certainly from Nedbank's point of view, we're quite sure of that, and I would say that the surmise that the other banks are looking at structural modifications to cope with that. And I would also like to say, if I can go back to the moving into Africa, you know, I think that some of the world-ranging banks are sometimes defined as everyone's local bank. They have that ability to transform themselves. But we must remember that there's a cost to being that. You mentioned Capitec earlier. But yes, they've had stellar results. But look at the impairments. They have grown hugely. And I think perhaps we have to beware that we don't just go chasing a myriad of small accounts and then find that we've got an equal number of doubtful loans. That is another challenge that we may be facing, which is why it's structured corporate finance that must be the main aim.
Well, you know, okay, I see you agreeing there, Louis, as well. I mean, obviously, as credit demand increases and credit supply increases, so do impairments and bad debts. How does one mitigate their risk on the African continent, apart from just focusing, as we said, on the structured trade and commodity finance and other various corporate activity? Clearly, it is something that many banks are going to be embarking on, and one needs to protect itself from the rise in impairments.
Yeah. Well, again, I think that all the banks have surely learned a lot through the current economic crisis. And I mean, I think risk-based pricing and just pure risk processes, stress testing, etc., that are all common terms these days, all put you into a position to manage your risk into the future much better. But I think it's quite important, and I think the comment that was made is that, you know, this is not a rush into Africa, and I think we've got the expertise and skills at South African banks to ensure that even at a human resources level, that there's an exchange of good quality staff that can help us to build capacity in countries so that we are better equipped to deal with the challenges and the risk management of the process.
I mean, Ian, would you suggest that banks expanding into Africa, and of course we know a couple of our banks are looking at buying perhaps other banks in Nigeria at this stage. I mean, would you suggest that banks do it very carefully and by stealth and not just rush into things? Well,
I'm not sure I'd like the expression by stealth, but by thorough investigation. Yes, I know that Nedbank has been involved in that sort of action. We have a relationship, an alliance with Ecobank, who have a big presence in 29 different African countries. Now, they have experience in banking on the ground floor level. We want to take our experience in resource development there. Together, we could have made a very good combination. And I think that is the sort of thing which possibly Nedbank and HSBC, if a deal does emerge, could see development to their mutual benefit there.
Louis, I hear you also wanted to say something on that matter?
No, I absolutely echo that sentiment that was expressed, and I think let's stay with that.
All right, James, thanks so much. Unfortunately, we have to leave it there.